You are listening to episode 5 of the Blockchain Weekly Brief. I'm your host, Jordan McGrath, and let's get into the first story. This week, the United States Securities and Exchange Commission decided to reject 9 proposals for Bitcoin-based exchange-traded funds. Less than 24 hours after rejecting the proposals, the SEC released letters on their website stating the regulatory agency will be reviewing the Bitcoin ETF decision. No deadline was given for the review.
2.
The Singaporean Central Bank, as well as the Singapore Exchange, is partnering with Nasdaq to integrate blockchain technology to link up transfer of securities and equity. According to the Singapore Exchange's project lead and head of technology, Tinku Gupta, this initiative will deploy blockchain technology to efficiently link up funds, transfer, and securities transfer, eliminating both buyers and sellers' risk in the DVP process, DVP standing for delivery versus payment. This is going to essentially tokenize the assets across the various blockchain platforms.
3.
In other news, the World Bank has announced it will be creating the first public bond using a blockchain in an $100 million deal intended to showcase how distributed ledger technology will improve bond sales practices. In addition to that, the Commonwealth Bank of Australia, the exclusive manager of the deal, stated that the 2-year bonds had priced to yield 2.251% and would settle August 28th. Australia is a common test site for market changes because of its highly regarded financial infrastructure and the experience of international investors with the Australian dollar. The blockchain initiative arises as the Australian Securities Exchange plans to utilize blockchain technology to settle equities trades to reduce expenses. Lots of good news coming out of Asia this week as Japan's financial regulators have reaffirmed their pro-cryptocurrency stance. Toshihide Endo, the commissioner of Japan's Financial Services Agency, confirmed the agency's pro-blockchain stance in an interview with Reuters earlier this week. Quote, "We have no intention to curb the crypto industry excessively. We would like to see it grow under appropriate regulation." End quote. Last year, Japan became the first nation to enact regulation upon cryptocurrency exchanges to safeguard consumer fraud while still allowing the technology to further develop. After the Tokyo-based CoinCheck theft of $530 million, the agency ordered some exchanges to suspend operations temporarily after discovering they lacked basic internal controls to protect their users and prevent money laundering. And lastly, the Bank of America has decided to embrace cryptocurrency. This is huge news. The Bank of America has filed for a new blockchain-related patent to develop a secure cryptocurrency storage system, according to the U.S. Patent and Trademarks Office. The patent is titled Blockchain Encryption Tags, and it will record and store cryptocurrency-related transactions by enterprises. Does this mean that your bank might soon offer cryptocurrency wallet and transaction services? Let's hope so. I'm Jordan McGrath, and this concludes this week's transmission.